Hello everyone, my name is Moji. You're watching a Bitcoin Bubble News channel. So when I look at it, I only see how much the room has grown. It grows at a rate of about 100% per year, which is twice as fast as the internet because it was built on internet infrastructure, which should go quickly. When I look at that trend as a whole, I see that it encompasses a space worth $2.5 quadrillion right now. It will be 100 trillion by 2032 if we keep going. I think that's the most money that has ever been gathered in such a short amount of time. As stupid as I am, even if I'm off by half, that's the same as the SP 500 adding 100 years worth of value in 8 years. Okay, it's a banana. The only reason is so we can own this adoption layer and all of these companies that sell block space. The best thing to do is to first try to catch that growth. You can't focus on just one thing in the space if you want to do something. Get between $2.5 trillion and $100 trillion. You're going to be fine. We talked to Raoul on the Journalman recently about his portfolio approach, his thoughts on adoption, and how he sees the liquidity of the crypto market. During this conversation, Bitcoin is being traded at $1.63. It has gone up 5% in the last 24 hours and 12% in the last 7 days. Powell talks about how he thinks Bitcoin could hit a market cap of $1 trillion, focusing on how important adoption is and the role of global liquidity cycles. He talks about how he manages his stock and says that he keeps a big chunk of his money in Bitcoin while also spreading it out among other assets. Powell talks about how Bitcoin is becoming more popular across many fields and how institutions are becoming more interested in it. This is especially true now that Bitcoin ETF has been approved. That is a great question. A lot of the time I try to explain this to people. It doesn't matter what other people believe, that's not how you make money. When you take into account risk, you make money by having the asset that does the best. I've found that networks that are getting more popular do best in the middle to upper part of the curve. The E-class cycle, Slama, this cycle, and I don't know who it is going to be this cycle, whether it's Sui, Near, or someone else, we will see. That's the best chance we have to make money in that space. First, pay attention to that. That's the main idea behind don't fuck this up. You'll make a lot of money if you take us from $2.5 trillion to $100 trillion. Stig Broderson, yes. After that, I just get rid of as many people as I can. There aren't many people whose signals I'll ever listen to. If you tweet something, I'll always read it because I think there will be a lot of signal to noise. There is a lot of noise around most people, so I'll keep an eye on it to see how people feel and if I can find any useful information, but I try to find as little as possible and stick with what I know, unless something shows that network adoption is slowing down. Just write that down. Then I don't have FOMO for the rest. I don't do it. I don't spread then. Last time I did that, I tried to get the word out about this story and that story. And what I do now is very easy. It can't be broken. The map is now next to Solana. I will put some money into something that looks like it will be a long-term trend against Solana. Still, I'll only put about 10% of my money into that kind of stuff, but you can make a lot of money in it. Because they were better than Solana, that's what got me interested in WIF and Bonk. I thought, okay, I can do that now. If someone shows me something, I'll look at it. Show me the chart where you do better than Solana. That practice makes it very easy for me because I believe that everything is linked to this everything code liquidity cycle. Every object in the world, which makes it it's all caused by the same debt refinancing cycle, which I believe makes it the best time in history to take big risks. Because the left tail has been taken out by the central banks who have said we can't let collateral fall too far, so we will debase currency, what the heck. If this is true, we have the simplest, easiest chance to take a risk ever. I think hyperconcentration is the way to go. Some people can focus really hard on the tail part and get it right, but the chance is less likely. The first rule is to not mess this up, which you break. Because it's bad to get taken out of the cycle and lose your money, and this cycle is going from 2.5 trillion to 100 trillion. Superpower I got from X that made the experience totally different is instead of saying what you think about something you're not sure about. Ask the question. That's the question. Yes. When I heard about Firedance for the first time, I went straight to X and asked, can someone tell me about this? When is it coming out? Then the signal is really cool. So I found it better to ask questions than to say this is what I think. Let's see what people say. What do you think about airdrops? Finally, I just want to ask what you mean when you say, I don't know what this means, it comes at the same time we were having. Are these bad rewards or are they good? You find that most interesting people take the time to answer that, of course, for the reason that it is intellectually honest. There are two parts to what drives assets in general, especially those that are driven by liquidity, short-term assets and long-term assets. I don't think of liquidity as a flow of money. It's just a pure loss of value for the cash. If you put money here and take it away there, the value of an item seems to go up. It took me a long time to figure this out because I kept mid-curving the whole thing, because I couldn't see why the stock market wouldn't have more volume when there was liquidity or QE. Because of this, it can't be doing anything. That kept going through my mind for 2 years before I finally said, oh, because it's just reiterating over COVID. I saw it in the Cayman Islands. That's how much home prices went up by 50%. They didn't trade there, they just went there because it was easy to get money. I thought, okay, I'm getting it over the past year. The value of the dollar has dropped about 8%. This is like a magical force that we don't really see. So we're gaining each other at about 8% a year for everyone in the world to pay back their debts. It's like a tax. I looked at this the other way because at first I thought, how dare they tax us? After that, you ask, how much would you pay for a put option that your stocks don't drop more than 30%, your home prices are safe, and the world economy is safe? Would you pay 8% a year for that put option? It's probably not way too expensive. That made me think differently. This is why I believe we've removed the left tail risk. This 8% is being used as a put option throughout the whole system. Okay, this is more about the flows, the real flows. That's the other thing you're asking. When I think of hot money flows, I think of investments in tech stocks. When I think of Bitcoin ETF bridge, I think of investments that come from other countries. Yes, that means that both of those flows are driven by something very simple. It's the way business works. Why? People have more money to invest when their wages go up. Yes, so the flows start to pick up. The ISM is still below 50 right now and is having a hard time picking up. The indicator that points forward is yelling higher. Things are about to get better. Crypto isn't being used by a lot of regular people. Why? People don't have the cash because jobs are still hard to come by and the market is still bad. From the VC companies, you know that nobody has had liquidity releases. From private equity to growth VC and all the way down to early stage token stuff, there's a real problem. That's it. Capital is stuck because it's not making any money. If you think about Tesla stock, the reason it's not very high even though it has all the tech stuff is that people only buy cars when they have money, which isn't much right now. Rates are a little too high. The ISM starts to rise in the macro summer, which is when the business cycle starts to pick up. This is because of the everything code and the crypto and the macro or crypto seasons. When earnings start going up, guess what? The world is full of people who take risks. That's it, I think, which is why it sounds so great played over and over. When you look back at 2022, you can see that cash was being taken out of all places. What do you think? Well, the prices of things went down. Why? Because it raised the value of money, not lowered its value, since you were lowering the amount of money in circulation. Okay, now you understand. It's kind of like buying back shares or burning coins. It's always the same way of fucking. After you see it, you'll think, oh, that's so clear. That's why all of the assets I chart against world liquidity look the same. For NASDAQ, 97.5% of it was linked to world liquidity. The rest is the outperformance because the market has been going up for a long time. The SP 500 actually does about the same. Why?